Let's begin with the valuation. The aggregated P ratio of over 2,290 listed companies in Hong Kong currently stands at 12.6, which is only slightly above 10-year average of 11.9 and very close to 5-year average of 12. From price to sales ratio perspective, the market looks reasonably valued at PS ratio of 1.1, aligning with 10-year average of 1.2 and 5-year average of 1. So clearly the market isn't overheated. It is sitting at fair to slightly undervalued territory, an attractive entry point if growth revives. Let's talk about the future earnings growth. According to the consensus estimate, the healthcare sector is expected to lead the change with 28.1% annual earning growth over the next 5 years. That's a sharp turnaround from its past annual earnings decline of 1.4%. The technology sector is also forecast to deliver 25% growth, although it's coming off a modest 2.9% growth last year. On the flip side, the energy sector is expected to remain almost flat with limited earnings potential upside. This growth divergence tells us where the investor capital might rotate in the near term. Would you agree that the performance speaks louder than the projections? Over the past 3 months, healthcare has surged by 25.58%, telecom is up by 15.54%, and consumer staples gained 15.4%. In contrast to the overall Hong Kong market return of just 7.97% during the same period. This clearly highlights a strong sectoral leadership, especially in defensive and growth-oriented segments. And this also supports the idea of selective bullish sentiment building beneath the surface. Now the bigger question is the Hong Kong index reflecting these trends technically also? Has the price action started factoring in this sectoral outperformance? To answer that, let's head towards the charts. We will do the multiple time frame technical analysis covering monthly structure for broader trend outlook. We'll cover the weekly chart also, daily chart for short-term signals, key moving averages including EMA 21, 55, 144 SMA and SMA 200 as well, to understand the dynamic support and resistance and potential chart patterns that might signal the accumulation or a breakout. Let's decode the underlying price action and evaluate whether this quiet moment is about to get louder. Let us begin with the monthly chart. You can see the massive drawdown and downtrending move in Hang Seng Index. This was the drawdown of nearly 56%. So it was a major drawdown. Coming back to the chart pattern, can you see here ultimately from the double bottom? The apex of the double bottom was this, and this was the potential area of resistance based on this support, and then there was a breakout in the recent time of this double bottom pattern. However, there has not been any follow through of the breakout candle. And why did it happen? Because if you see closely, this was the head, this was the left shoulder, and this was the right shoulder. So if you draw this line, it becomes the neckline of head and shoulder pattern, which is practically a distribution pattern. So the price is getting rejected from the neckline area of this head and shoulder pattern. So if I superimpose some of the technical studies, which will give you why this 24,875 has become a resistance and immediate hurdle on upside move of this index. This is the support, this is the support, this is the support. There was a breakdown over here. So during this pullback, price got rejected from here. Again, during this pullback, price is getting rejected from this particular area. Now, if you see the overall structure of the market, if you see this trend line, which is a support line, and combined with this trend line, it is something like it is trading in a rising price channel. But if we calculate the target based on the breakout of the double bottom, the first target comes at 27,850, which is nothing but the 61.8% expansion level of this target, which means there is a significant possibility that this level may give a breakout, because this is the resistance area. So this area has a multiple confluence that includes SMA 144, which is also acting as a resistance, because earlier it acted as a support. So it is very important that this index start trading above SMA 144 in monthly time frame. Once this level is taken out, the next potential target based on this double bottom is 27,850, and then possibly too it can move to the all-time high of 33,400, and then we'll have to see if it gives a breakout of upcoming rounding pattern. And if it gives the breakout, then there will be massive upside potential in this index. Let us check now on the weekly time frame. This is the weekly price chart. Can we draw a trend line? I am drawing a trend line. Watch it closely. What this trend line indicates: price has taken support here, taken support here, taken support here, and once again the price has taken support here, forming a bullish pin bar kind of candlestick pattern. So there is a higher lows kind of market structure that indicates that the bulls are still under control despite of this recent correction. Now let us move to the daily price chart to understand the recent price action. Look at this area in the daily chart. Price was trading below all critical moving averages like SMA 233, SMA 200, SMA 144, and even the short term moving averages like EMA 21 and EMA 55. Then what has happened? There was a crossover over here. The EMA 55 crossed over SMA 144, and the slope of SMA 144 started inclining upside. That indicated the trend reversal. During this downtrending move, if I draw a horizontal line like this, there's a left shoulder, head formation, right shoulder, and a breakout. So there is a breakout of a reversal chart pattern, inverse head and shoulder. And when this correction took place, it defended the neckline, which is normally a throwback phenomenon in the market, which happens majority of the time. And then again, the price started rising. So now during this correction, price has taken support and respected SMA 200 and SMA 144. It did exactly the same. Here what we can see, during this correction, trend remained intact. EMA 55 is still above SMA 144, SMA 200 and SMA 233 is below the currently traded price. After nearly 6 years of downtrend, Hang Seng has finally shown the signs of life with a breakout from double bottom on monthly chart. While 24,875 remains a key hurdle, the projected target of 27,850 gives us real optimism. What do you think? Can Hang Seng Index break through? Drop your thoughts in the comment section. And if you have found the analysis valuable, support the channel by clicking the thanks button. It really helps us to grow.